Welcome to TradeTheMBA.com. This is John. This report is for the 17th of July. Well, we saw a little bit of a backfill on the ES. Still went to the peaks. We're well above the ABM yellow, though we do see a little pre-market open. Got us all the way down to 27.90. And you can see 86 is the ABM yellow. So still maintaining above that. And, well, the ABM green is almost approaching the 76% Morganacci lines here, which indicates that you're still riding nice and strong to the peak. Still expressing some weakness from DOC standpoint, so if it can hold up within what we're seeing from algo activity that's starting to activate to the downside, and price doesn't match, then you're doing pretty well. Here you have the NQ, a bit more of a dip, and obviously I think that was some earnings-related situations there, but just it's got some positive extremes here that are going to need to be filled back. But again, also right at the ABM yellow, holding up just above it. Doesn't mean it'll be able to sustain it. We can see that we're getting a little bit of a drop off, but you're going to get that back in flow, particularly when you're edging towards new highs. It's always going to be that hits, comes back a little bit, and hits it again. We're not seeing a major spike of orange or anything on the dailies. And then we also talked about that overall weekly was developing potential for the buy signal. And the euro, again, right at the top side of that range, approaching the 50% mark now here because of the declining. And so we talked about here with this declining highs from back over here, that which would come first, the breakout of the range or the 50% dropping down to where the highs are. And clearly that's exactly what's happening there. Still not within a confirmed buy on this setup from the dip, but performing pretty decent. The disconnect here with the treasuries to what's going on in inflation just represents a fear factor, and you've heard the little stories about people setting aside out of the market for fear of a imminent collapse, and it hasn't come. And again, that's going to be an interesting one, because the later we get in the year with that situation, the more impetus there is going to be to get back into it, to catch yield. Because again, you've got to match the performance if you're a fund trader. And oil, this is a beautiful one. You turn on the spigot, and it didn't take long for oil to respond. Of course, what did it respond to? Nothing we didn't already see, which was positive extremes. And we talked about this low down here, 1379, that was going to get revisited, and it seemed crazy as we were spiking up to the peaks, but it's possible it could even do that within the next day or so. No shock with any of that. Gold, again, we could see that the signal that came through just was likely to retest that low off of the dip below the red line of the extreme histogram here. We've pretty much done that now. The question is it enough of an improvement from the DOC here? We went from this extreme oversold portion here to a bit more moderate, but it still hasn't produced a new turnaround buy setup from that standpoint. So still broader weakness expected within there. Let's shrink this 5K chart that we can see. We're starting to get some a little bit more erratic pre-market candles here from the dips. This massive rise from 0 to 50% all in one bar. We started the day with the white candles, which not particularly bullish thing when we see that happen. And pretty much the gold candles that developed in here were always within self-configuration from this DOC spread that began. The first one was right there, secondary one happened a little bit right over here, and breakdown to the 50 didn't find any new buy configuration. And that's what I look for. It's when you get to those key points, do you have what you're looking for as far as a turnaround buy setup, which developed like right back over here, coming off of a dip below the red line. All right, I'm not expecting much more than the 50%. Got a little bit above it, and then did what? Refilled it, and then refilled it on a higher move. The problem was it then dipped below the red line again on new lows. So the pop there again wasn't going to be sustained until retested the lows, but did so on higher DOC readings as well as the higher extreme, and that's what gave it a little bit of oomph to come back. The problem is, it looks like it's going to get near positive extreme territory within this, so we'll see if it's able to sustain itself. In the broader segment, nothing happened with the Russia thing. That was, I think, an ease to the market in the sense that anytime you're talking, you're not about to go to war, which means some degree of stability exists, and that's not a scary thing for the market. So there's no real crisis development like we had with North Korea and that whole setup. So I think the dynamic for right now is there sustained growth, and will we see inflation erode any of that, and how much of that inflation needs to get baked into the value of the market readings. And at this particular point, I think we can see that there's just quite a lot of back and forth uncertainty as far as what that real number should be. And again, it becomes a question of we've got to wait till probably the beginning of next month or towards the end of this month to see if money is going to move back in and transition, or if it's just going to be just a slow ebb to fill over back into some of this extreme overbought, if you want to call it that. It's not really the best term for it, because finally we've got a few positive extremes that just indicated the algos like that for a little bit of activity, and it's a significant number of points, but as a percentage of the market move, it's not really all that much. So I think that we're just in for some nice little trading signals within a fairly reasonable range, at least in the near term. So we'll take it from there, and we'll see what we can come up with. If anything interesting pops up, I will put the charts up. As always, trade well.